Hey guys, I'm Steve and welcome back to the channel where we talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, hit that subscribe button. Trust me, you won't regret it. If you're a returning subscriber, welcome back. Guys, I seen a video a second ago about, and it was from Bank of America CEO, Brian Moynihan, and he was talking about, spending habits and what the consumer's doing in regards to what the Fed is doing with the higher interest rates and what he's seeing in his, endeavors as a CEO of Bank of America. And what he said, a couple of things he said were kind of alarming to me, and it lets us know just how far we have to go with this recession thing with the interest rates and what the Fed has to do, to get inflation down. Guys, we're not even we're at the tip of the iceberg. A lot of people from hearing the Fed speak and them raising interest rates multiple times, we're thinking, oh, with them doing that, it's the inflation's starting to come down. But what was recently reported, a couple weeks ago, we ain't even made a dent, it seems like. So this is what he said. He said, the American consumer spending, and this is just him with his stats at Bank of America. American consumer spending is up 10% more Q3 2022 than it was Q3 2021, right? So the average American consumer has been spending 10% more than he has last year this time around, right? It says transactions are up 6%. The American consumer is very resilient. And that's basically what he was trying to say. Another thing is, he said, unemployment is still very low, and it shows that the people are working. He says 35 out of 35 million customer accounts, and this was telling me, he said, pre-pandemic, the average bank account was $3,500. Post-stimulus, when they gave out all the money, looking at the accounts now, on average, the average account has $13,000 in it. Right? Now, granted, a lot of people are saying, well, I don't believe that because I don't have $13,000 in the account. I mean, not me personally, but, somebody might be saying it to themselves. You got to remember, it's 35 million customer accounts. So, it ranges all different social classes of people. But that was very telling. He said, average loans and leases have topped $1.3 trillion Q3 this time right now, and it's steadily going higher. New checking accounts 418,000. This is the Q3 numbers. So 418,000 people started new checking accounts. Now, a lot of people are switching banks, but a lot of people are young teens coming up or getting a job for the first time and opening business accounts. I mean, not business accounts, checking accounts. He also said digital wallet transactions were up 63%. So a lot of people are using their cards. And along that line, that small business checking accounts are up 5%, right? But in the turn of events, he says total client balances are down 12%. So people are keeping less money that they had in the bank before. Now, I don't know if that has a lot to do with what the Fed is doing, or they just were trying to, a lot of people bought cars or whatever. But with the interest rates rising, the Fed don't care about you. And I'm not saying you as an individual. They only care about one thing, getting this inflation down. And one of the tools they use is raising rates, like and the first thing that gets affected is what? Unemployment. So the reason why I bring that up, in 2023, you can expect sheer hell and panic. Now, I'm not saying just in the market, because you're going to get a lot of false reads in the market where the market's jumping up and jumping down. A lot of people are going to be waiting for a rally. And you guys know how it is if you're seasoned investors. The market can run green 3 days in a row. Everybody will be like, oh, it's the end of the bull market, and take off and then jump into it. And then we might be followed by a down period because this thing is not done. And I loaded a video earlier this week about signs you could see that we're coming out of this recession and the interest rates stop, among other things, and you'll know we're entering into the bull market. So you guys might want to check that out. But yeah, along the lines of this guy, another thing is American Express CEO, what's the name? Stephen Squarey? I think it's Squarey. He also said, and they had their earnings today, and their stock dropped 4%. You know, he says we're not seeing any changes in the consumer spending. People are still spending money, folks. You know, they're unfazed. You know, he also said that since 2019, they have had plans for the recession, and they're just going to pull it off the shelf. And so, you know, they plan to pivot when this thing really gets to jumping. So they already got a stalwarts in place in case the panic happens. So I mean, it's just, you know, what he's saying, but I mean, I guess that's a good thing with the company. Now, I don't want to make this company about American Express, but I do want to say this though. American Express, I'll be watching it the following week, and you know we got a big earnings week next week. We got Amazon, Meta, I think we have Microsoft, and I think we have Amazon, and I know we have Meta. So it'll be a big week to watch come Monday, moving forward to Friday and next week, to see exactly what these numbers are going to be, because you know, a lot of us are predicting that the numbers are not going to be good for a lot of these companies, thus the price will come down and there'll be a lot of value out there in the market, you know. But like he said, he wasn't, you know, guys, the people ain't slowing down. People ain't affected. And the reason why I say we're at the tip of the iceberg, yeah, they made all those interest rate hikes. Unemployment is still not low enough. And it's not going to be low enough for a while. First, it was at the end of the year. Oh, okay, we'll start seeing adjustments at the end of the year. Because remember, in November, it's October now, in November and December, they're supposed to make 2 more rate hikes. Right? Yeah. Interest rate hikes. So will the next rate hike mean something? Because you got to remember, every time they make these rate hikes, it's a month. They're a month behind to see what the result is. So if they make a rate hike, when they make the rate hike in November, it'll be these numbers this month to see what happens. So it'll depend on how much they actually go up on the rate hike. Will it go over 0.75% or not? We don't know. But, and then comes November. But can you imagine the scenario? We still where we are, and we make a small dent running into January. I can almost guarantee you the market is going to flip, and it's going to dive. You know, just from experience of watching with the way the inflation's going and the way the market has been going since I've been investing, you know, you guys can expect a lot of roller coaster rides and a lot of ups and downs. But you got to keep your eyes on the prize. You know, like they say, this is a big wealth transfer. And when they say wealth transfer, meaning a lot of people that are investing and they were going in their journey, it might be 4, 5, 6 years into their journey. As the stocks were climbing, now the stocks are going to fall, and they have cash reserves, and they're going to build those positions and push themselves further and further into the future of where they would be if we wasn't in a bear market. So you gotta remember that. Like me personally, the majority of my money, you know, I buy stocks and stuff like that, you know, but the majority of my money is in big blue chip companies and stocks that'll be around and have stood the test of time. Now, in closing, guys, I just want to say a little bit about that, because I thought that, you know, it was interesting what they were talking about and how we haven't even made a dent in this thing. But all I can say is what I'm going to be doing in the future, and it's common sense, guys. I'm going to put my money in good businesses that are well run. They're going to weather the storm, you know. You as an investor, your task is to find these companies and make sure these companies have stable profit margins, because these are the only companies that are out there that are going to weather the storm. Now, we don't know which, in 2023, we don't know which sectors will take off. If energy will still be up in the high 20% as it is now, we don't know. We don't know what the current events will be, geopolitical impact. We don't know any of that. But what we do know is, you're trying to get your portfolio together. You're trying to, you're on your road to financial freedom and all of that stuff. You want to do what's best for you. Growth stocks are okay, you know, when you're preparing for the bull run. But as far as, you know, investing with peace of mind at night, no matter what the market's doing, you can't go wrong with blue chip stocks. So you guys, it's the weekend, you know, make it your mission. You got a little bit of money to invest, or you don't know what direction you want to go into, take a look at your portfolio, see where it's at. You know, like I said, it's not a sprint, it's a marathon. 2023 is going to be very, very interesting. So you can get your battle plan together right now and strike the first blow before we even get to January. You know, and you guys will make out all right. But it's Friday. Happy Friday to you. I forgot to add that. I appreciate all the comments. You know, give me some comments. Tell me what you guys are planning to do. And guys, hit that subscribe button. Subscriptions have been going up. I appreciate the support. And smash the like button, man. A lot of y'all coming in for the first time and you see me, then you come back. I got a lot of good content in here that goes for a lot of people. You know, I got a little bit of everything. So if you didn't like this video, or this video was educational to you, I got a lot of other videos in the library. So you can subscribe and check them out. But as always, man, I appreciate you spending the time with me. I'll see you guys in the next video. Take care. Have a good weekend.